hopefully Michelle will be able to get some of our connection issues taken care of.
All right, sounds good. So good morning, everybody. My name is Mindy Lee, and I am the Public Relations and Events Manager for the Kansas Small Business Development Center. For those of you who are unfamiliar with us, the Kansas SBDC is the state advising resource for entrepreneurs and small business owners in Kansas. We help small businesses with a variety of services, including anywhere from financial planning to marketing to growing your business with exporting and so much more. And thanks to the funding we receive from the U.S. Small Business Administration, the Kansas Department of Commerce, and local and regional host institutions, we are able to offer the majority of our services at no cost to our clients. With that, I'm going to introduce the director of the Kansas SBDC Capital Access Center, Vince Hayworth.
Hi, good morning, everyone. Thank you for being in attendance this morning. And looks like we're all going to have great weather today in the beautiful state of Kansas. So thank you for taking time out. We have a terrific subject matter today. 2021 is going to be an interesting year for funding. And one of the topics that we keep getting is SBA lending. So as the KSBDC and the Capital Access Center looked at subject that we wanted to present to our audience, SBA lending kept coming up as a subject that would be great to cover. So we're going to talk to a panel of experts in SBA lending. All these individuals have been top performers in SBA lending, and is going to bring a great wealth of knowledge and insight to this particular lending platform. And so we're really excited to have these members on. We do have one panelist that's having a little bit of connection issues. So she's working on that right now. But I wanted to take a second to thank a lot of our partners that help participate today. First of all, the SBA, thank you for the funding. For our Kansas Small Business Centers and the Capital Access Center, our KSBDC advisors, directors, and especially our marketing department that helped put together this presentation today. The Chambers of Commerce throughout Kansas, our economic development partners throughout Kansas, KC SourceLink, SCORE, and of course, Network Kansas. So thanks again for your partnership and your support. We appreciate that. We're going to take a little bit here to introduce our panelists today. So starting off, I'd like to, Russ, if you could just introduce yourself, who you work for, a little bit about your background, and then we'll move on to the other panelists. Russ, I think you're on mute.
Vince, thanks for having me on again. I appreciate it for the invite and glad to be able to participate. My name is Russ Bonatadibus. I'm Senior Vice President, Commercial Lender at a community bank, about $175 million bank. I've been in banking about 27 years. I've been doing SBA lending for about 25. In a community bank, you kind of do about every kind of loan you can think of. Fortunately, I don't have to do mortgage lending, which is a totally different creature. So I have a lot of experience working with a lot of different industries and businesses, along with not only just SBA, but others. So looking forward to being able to help people and answer questions.
Thank you, Russ. Your experience on the panel is going to be greatly appreciated today. So I'd like to go ahead and move on to our next panelist. Michelle, I'm going to go ahead and put you right on now that you have a connection here.
Great. Can you hear me?
Yes.
So I'm Michelle Walters. I'm with Fortune Bank, and I've been doing SBA lending now for about 11 years. I don't know what questions you asked earlier, so what more can I tell?
Oh, I'm sorry. Just introduce yourself or your background and who you work for.
Perfect. Okay. Looking forward to working with everybody today.
Thanks, Michelle. Appreciate it. Ryan.
Yes, thank you, everyone. My name is Ryan Collins. I'm the AVP of SBA lending at Lincoln Savings Bank. We are an Iowa-based bank. We have about 17 locations within Iowa, and our only physical branches are in Iowa. But we do lend at a national basis, and we're a community bank, and we're about $1.5 billion in assets. A couple of highlights of our team and of our bank. Last year, we were the SBA Lender of the Year within the state of Iowa, also the #1 women business-owned lender in Iowa, and the #1 export lender in Iowa. And then also kind of a cool little tidbit about our bank. We are actually the bank of record. We have a division that supports fintechs. And so we were the bank of record for 7 of the top 10 financial technology companies on the App Store. So if you've heard of, Acorns, Cash App, etc., we're the bank of record for all of those. And really adds kind of an interesting aspect to our community. Truly a community bank, and allows us to provide access to capital to our small communities within the Midwest.
Okay. Thank you, Ryan. I appreciate that introduction, and we appreciate your participation in today's panel. Tim?
Thanks for having me. My name is Tim Barone. I currently serve as the president for Kindle Bank. I've been in commercial banking for well over 20 years now. In the last 10 years, I niched myself in SBA lending, and I've been very proud to run some of the top SBA teams in Kansas City area. Currently, Kindle Bank serves as the top SBA lender in the state of Kansas, and we're top 3 in the Kansas-Missouri district. So excited to be a part of the panel.
Thanks, Tim. I appreciate it. As you can see with our audience, that we have a terrific panel today. Unfortunately, we are missing one of our panelists today, but that's okay. We have a terrific group here. And so we do have some pre-planned questions. We'll get the ball rolling, but for our participants, please feel free. This is your chance to ask the bankers the hard questions, or the questions that you may be a little hesitant to talk to your own banker. These are the times to ask, and I can assure you that the group that we have on today are willing to help anybody that's on our panel or in our audience today. So I'm going to go ahead and get the ball rolling with the first question. We've seen a lot of changes with the SBA program, especially here recently. So I'd like to ask each one of you if you could weigh in on how some of the rule changes, especially the recent one, if you want to comment, which literally just happened a few days ago, how that's going to affect borrowers going forward, and kind of what you're seeing right now, specifically probably about the SBA payments. I think that's probably a big question that we hear. So who would like to go ahead and jump in first?
I'll start the ball rolling. I think that the fact that they're making 3 months of payments for all existing borrowers, as well as 3 months of payments for new borrowers, that's a pretty big program right there. Along with the waiver guarantee, it definitely is a time where it's very advantageous to have an SBA loan versus not having one.
Yeah, I totally agree. Michelle?
Yeah, this is
Ryan?
kind of on the same topic. Vince, you had mentioned that the program was recently changed. That 3 months actually used to be 6. And so we were very, very excited about that. They've since changed to 3 months. And so I know within our bank, our bank is very big in advocacy. And so we're actively advocating with both state and federal legislature to get that back, because it matches the vaccine schedule. Everything that they've talked about with the vaccine schedule, we need to make sure that that payment relief matches that, so that our businesses that are most affected can continue to see that relief. So to Michelle's point, yes, most beneficial time to ever do SBA lending because of the fee waiver and the payment relief offered. But we're trying to get it back to what it was just a week ago.
Yeah. Big changes. It seems to be coming Tim, I think you were going to chime in there.
The only thing I would add is the guarantee percentages also increased temporarily from 75 to 90%. And so a lot of borrowers may not understand how that impacts them directly, but what it does is it allows the banks to take a little bit more risk when we otherwise might not, especially around a collateral pool. Typically SBA loans are undersecured or unsecured. And so or they may be an industry that's directly affected by the COVID. So having an increased guarantee helps protect the borrower and protect the bank to take a little bit more risk and put capital back out in the markets.
Yeah, and I would throw this back out to the panel. What does that do for all of you with a 90% guarantee now? Does that allow your credit departments to go out and have a little bit more not faith in the deal, but it certainly reduces that risk. Have you seen a big change in your credit philosophy because of this?
I would say that I hear on the street a lot. I think there's a lot of activity right now in SBA lending because of the 90% guarantee. And a lot of banks are working now to get deals that maybe they were sitting on or deals that maybe they were pushing. They're working now to get them done because they want to have that increased guarantee. So I would say there's a lot more activity because of that. And to comment on Ryan's point too about the 6 months to the 9 months or to the 3 months, apologize. I would say this as well. You know, they cut that back to 3 months because they're concerned that the funds will not last. They're concerned that the funds that were allocated for that program won't make it. So, you know, we've been encouraging clients, don't sit on the sideline. If you think you're going to be doing something and you think now versus 6 months later, that 3 months may not even be there 6 months later. So it is imperative that you do move quickly if you're interested in taking advantage of these programs.
I agree. Russ, have you seen a increase in loans requested in your general area?
You know, we have, and what we have seen a lot with is just business buyouts, where you have some individuals that have owned a business for a long time that have decided that it's time that they want to retire and move on. So it's been really good to work through the SBA, especially when you're talking about financing Blue Sky. And we've been able to do several business acquisitions where a majority of the value in the sale of the business has been with Blue Sky, which, as everyone knows, is that non-collateralized piece. And SBA has been really good about allowing banks to utilize business valuations to help with that gap. And there are some SBDC offices. We have one here in Emporia Market that really does a great job with those business valuations that are SBA approved. And we've had good success with that. I think that coupled with, when you're looking at doing a business acquisition or buying equipment, the opportunity to look at those express lines of credit where you have actually can go up to 90% guarantee versus or not on the 75% on the express lines, but even 90% on some of the small 7A loans. That's definitely when you're looking at pairing together and packaging the right loan mix, because more than likely they're going to need some type of line of credit, because the SBA does not give very good value to accounts receivables. They only allow about a 10% collateral position value on that. So now you're looking at more emphasis in those express lines. As we're looking at those, we are trying to set customers up to be successful with a number of those. So it's been really good to have those changes, especially waiving the guarantee fee and the ongoing servicing fee for banks. That's certainly nice because, we pay a percentage of that to the SBA. So again, it allows the banks to be a little bit more open to packaging some of these that are a little bit more riskier, that don't have the collateral there, and helping businesses get structured and be successful.
Great. Thanks, panelists. I think that's great discussion. I did want to hit on one thing that maybe some people in our audience may not know. kind of how a SBA guarantee works for a bank. Would someone like to maybe take that on in a shortened version? We all know that there's a lot of caveats to that, but if any of our panelists might want to just explain how that guarantee works and how that helps a bank get comfortable with the deal.
Well, I'll take it. So the guarantee it's actually called a loss share guarantee. And it is a mechanism to protect the bank from losses in a situation, in a loan where you might not otherwise make. So what I like to do is kind of walk my borrowers through how a guarantee works in a liquidation situation. So the typical guarantee percentages range from 50% to 90%. 75% is the biggest average. So if there's ever a liquidation event, the borrower defaults, the bank proceeds with the liquidation like it normally would. At the end of the day, let's say we gave $1 million loan to someone and we liquidated everything we could. And at the end of the day, we're left with a $200,000 loss. The bank then goes to the SBA and says, we've done everything we could. The SBA reviews it. And if they honor the guarantee, let's say it's a 90% guarantee of the situation, then the SBA cuts a check to the bank for that 90% or $180,000. So then you've got a $20,000 gap that you either work with the borrower on or you charge off. So that's the essence of how they work.
Thank you very much, Tim, for that excellent explanation. I think there might be some participants out there that weren't sure how that guarantee works. And I think you can see how that really helps a bank get comfortable with a potential loan with that guarantee in place. I've always likened that to mortgage insurance PMI. It's kind of similar where it all kind of goes into one fund where the SBA then when they do have a loss that they need to pay out, they take money from that fund and pay back the banks. So if you've ever had PMI insurance, it's kind of that way. And that's they get that from the guarantee fee that you pay when you actually take out a loan. I think Michelle hit on this for a question that's a good segue about the funding changes coming up in SBA this year. I think that was a really good comment because that was actually one of my questions that I had. Do you see for our panelists funding changes coming this year? I think we've already kind of heard a little bit, but I'd love to hear your thoughts on that. And we do not want to get political here, but we do have a new administration. And do you see major changes come into the SBA this year with a different administration? So I'll throw it out to our panel.
I think we saw it yesterday with the most recent change being that on the second round of PPP now they're talking about basically making it where for the next 2 weeks only companies with 20 employees or less can apply for the PPP second round of funding. So to your point, I think that while we talk about all these programs today, those are the rules today. And going forward, as funds run out or as different administrations meet and different parties meet, there will be more changes coming to the program. And I think that probably everybody on the panel probably would agree with me on that. What we know today will be different even a month from now.
I agree.
Yep, completely agree. And one thing that we do know, or at least have seen from history, is that as these federal programs and fiscal budgets are rolled out, or stimulus budgets are rolled out, there's no putting the appropriation back into the box. You know, if they've said, here's the appropriation for this new stimulus, they're not going to backtrack on it. And so do we suspect that there will be changes to the SBA program? Yes, just as Michelle had already alluded to. What those are, though, we're going to kind of have to wait and see as those continue to roll out. But like I said, those appropriated funds don't ever go back into the box. And so if there is a surplus somewhere, such as PPP, those could possibly be appropriated elsewhere in order to maximize the budget that they've already allotted for.
Russ and Tim, what do you guys think about that?
Well, you mentioned the administrative changes, and yeah, it doesn't matter what side of the aisle that you lie on. The Biden administration, I think, has made it very vocal that they're going to do as much as they can to push as much money out to individuals and to businesses as they can. And I know they're working on a couple different rounds of stimuluses, which will likely change everything that we've thought we knew in regards to PPP. But one of the things, and I think Ryan was kind of starting to hit on it, is the appropriations and the allocation of the PPP money, and then how that affects the traditional 7A lending too. When the first PPP came out, they didn't bifurcate those pools, and they basically said whatever you allocate in PPP goes against the total allocation we have available for traditional SBA lending. And that's not good for us as SBA lenders, because then we tap out on that appropriations and we have to go back to the government, and the president has to sign off on increasing that allocation. So the one thing that they did do was separate that out. So we need to make sure that they continue to do that. So as we continue to push the PPP money out, that it doesn't affect the traditional SBA loans and the long-term funding opportunities that they're trying to push through the stimulus program.
Great insight. Russ?
This is, yeah, absolutely. You know, for the customers out there, it's been a tough year with all the different programs rolling out. You know, we had the initial EIDL grant, or the Economic Injury Disaster Loan Grant, and then the PPP rolled out for the first time, that round one, and people receiving their PPP money before they received their EIDL grant money, or their EIDL grant money just showed up. And then, you know, several months down the road, they're getting contacted to apply for the rest of their EIDL money that they could borrow for operating expenses up to 6 months. And then you throw all that mix in, and it's really difficult for customers to understand that, because it's difficult for bankers to keep up on everything that you're doing. So with all those changes, and then just like when we did the forgiveness, the SBA withdrew the EIDL initial advance, $1,000 per employee up to 10 grand out of the PPP forgiveness. But then they turn around and come back with some of the funding changes, went ahead and refunded the EIDL money back. So, you know, it's been a challenge, and we understand that. And I think as bankers, we have tried to stay up on all the changes as quickly as they happen and get word out to our customers. That's just like this last one that just rolled out that we've talked about, where we're going to allow for more segregated kind of area, where we're looking at no more than 20 employees, sole proprietors, including beauticians and so on. And that literally came out on Monday and said, we're going to have it up and running Wednesday. We get apps today, and we still don't even have the changes or calculations that we're going to need to have to be able to help customers. So I would ask customers that, you know, be patient, contact your banker. You know, we're trying to stay up on as much as we can to be able to advise you, but it is confusing with all the different programs and all the different money that's being sent out. And we appreciate that from their side, because they're the ones that are impacted. We're trying to help, and we want to help. So again, just bear through the process, but I think you'll see more changes coming down the pike.
Yeah. Excellent commentary, Russ. I completely agree with you. For bankers this year, I don't think a lot of people on the outside know just how quickly the PPP programs and EIDL were rolled out. I mean, it was pretty historic to have that rolled out so quickly. Usually it takes years for these programs to be developed, and there was a lot of holes in it, but the overall goal was to get money to businesses quickly. They knew they were going to have to backtrack, so there was a lot of questions and things that people did not know. And so I think, to your point, everybody's kind of rolling with the punches, right? And trying to do your best that you can, working with your clients. And I think the other thing that we can probably all agree on, whether you're red or blue, I have never seen an administration not support the SBA. I think whether you're on Republican or Democrat, they've all supported the SBA. So I do not see that the program's going to be any kind of defunding type situation where I think we're just going to see continual support with the SBA program going forward, especially in 2021, where we're trying to see our economy recover. That said, I'm going to move on to our next question. What are some common misconceptions about SBA lending? When you're out there on the street, you hear people say, oh, SBA lending, oh, it's, not the greatest program. I've got my personal thoughts, but I'll open it up to our panelists. And there is a lot of misconceptions out there about SBA lending, so I will open it up to our panelists and like to hear that discussion.
This is Russ. I would say from what I have, talked to customers about, is the misconception is the government's going to tell you how to run your business. And that is not even the case. You don't even talk to the SBA. You don't talk to the government. You're working through your banker who partners with the SBA to provide financing. I think that's one of the biggest misconceptions. The other one is that some of these take too long. And when they hear about traditional financing versus SBA, sometimes they do take a little bit longer because there's a little bit more that has to be done depending on what kind of loan you're doing. We're a preferred SBA Express and PLP lender. Some of them we can do fairly quickly if it's all packaged right and it looks good. We do a really good job at that. If you have things that have real estate in it that have environmentals, customers don't understand that very well. They, where you have to get an environmental report and you have to have it sent up and approved through the SBA, those are delays. Underwriting, sometimes there's the delay because there's a number of applications that have been submitted. So it's not a fast, quick process in some cases, and in some cases are, but the misconceptions are, well, it's take too hard. There's too much paperwork. We package our SBA loans with our customers by collecting the information, and we have a packager in-house that helps with doing that. So that makes a big difference. And I know one of your questions is down the road. What do you look for in an SBA lender? And I think those are one of the things you need to look at is what kind of experience does that SBA lender have? And do they package everything there? Or do they just drop off everything in your lap and say, hey, fill this out and turn it in when you're done? So I think those are some of the misconceptions that I've come across.
Okay. Thanks, Russ. I appreciate it. Who would like to go next on this subject?
Yeah, kind of one that I've seen a lot is the misconception that either A, it's two loans, or that it's a loan from the federal government. In both scenarios, that's not the case. It is a loan through your bank that has provided a guarantee from the SBA. So any kind of correspondence throughout the loan process, and then if you do successfully achieve funding, any kind of correspondence will run through the bank. It is their loan, it is on their books. Until the SBA, outside of underwriting, the SBA is not involved until the loan is to be liquidated. And so really I think that's probably the biggest one that we see. Just as Russ had mentioned as well, timing is big. If you think you need an SBA loan now, then obviously connect to your banker, but it's going to take time. So if you think you need it in 3 months, especially given today's environment, talk to them now. There's no reason that you shouldn't be having those conversations now. And that's an excellent place where service partners such as Vince or such as your area economic development offices can assist in that, so that when presenting yourself towards a bank, you're putting your best foot forward, and then that also allows for that timetable to shorten up.
Great. Thank you very much, Ryan. Tim, would you like to weigh in on that?
Well, I'd kind of echo what Russ and Ryan said. I think in my experience, the folks that are coming usually that I'm meeting with that have a negative attitude towards SBA have started the SBA process with the wrong lender. And so they will go with a bank that they've known forever, but may do 1 or 2 SBA loans every few years. And they're usually like a 504 loan, which is done in concert with a CDC, a certified development company. So I think it kind of leads into maybe another point that you're going to make, Vince, that you have to make sure you're with a lender that knows what they're doing, and that they've got a team in-house that process, that they truly have seen and submitted loans and can help you overcome the obstacles and not just send you to the SBA.gov website, but actually help you with the forms and teach you what the right loan program is that you need to be in, not just, kind of just send you off on your own.
Great, thank you. And Michelle?
I think the only thing that I would add is that I think that a lot of businesses don't understand that SBA is for them. They think it's only for startups, or they think that it's only for, companies that aren't performing. And what's ironic is with SBA, we still have, prudent lending. We still have to ensure that businesses can repay debt. So we work with a lot of existing businesses that end up being SBA because of some scenario within their business that doesn't really qualify for the other world, if you will. But we are much more than just startup lenders, for sure.
Great commentary, panelists. I echo all your thoughts there. I think, to your points, Michelle, when you look at a typical client, a lot of times they don't understand the benefits of working with the SBA program. You think about a standard loan term on a conventional loan is typically 5 years. In the SBA, it allows you to go to 10. So when you think about a repayment back for a business, what does that do for your cash flow? And that can make a big difference for a business. So appreciate all the commentary there. I think that's excellent. I think this may kind of lead into the next question. I think some of you guys kind of already answered this, but what are some of the mistakes that business owners make when it comes to SBA lending? I think we've heard a couple of them. Feel free to kind of reinforce that, but panelists, what are your thoughts on that?
This is Russ. I have to go back to what Tim said, is making sure that you get with the right SBA lender that can assist with all kinds of SBA loans, not just one particular one, and that they help you through the process, make it easy for you, and have the application being processed to where they're processing it there, not sending you some other website. And a good SBA lender is going to make sure that you're drilling down on what you really need and borrowing enough money. So many times clients come in, they just want to borrow the least amount, which is commendable, but you also want to be in a position where you're going to be successful. So by the time you look at, they leave out working capital or they leave out some other things. And so you want to be able to package it so they're able to cash flow during the time where they're not getting enough revenue in with paying expenses. So a lot of times you see they don't borrow enough. The other side is they don't drill down. I want to buy equipment. So when we try and drill down, okay, what are you going to buy? Because when it comes down to it, you're going to have to be able to provide invoices that somewhat match up to what you're going to purchase. And there is some tolerance level there. If you don't spend enough in a particular bucket for equipment, it's 10%, you can move to working capital. But again, you just can't move it from line item to line item. So if you say I need $50,000 for equipment, you spend 30, you just can't plop another $20,000 over somewhere else. So getting customers to understand how that money is going to be utilized up front. One of the things that we try and do is we sit down with our clients and we do two different matrices. We do one that basically breaks down the sources and uses, so we can understand what they're wanting to buy, what they're needing, equipment, working capital, and then we kind of show them what percentage they're going to have to inject into it. Because it used to be if you had plenty of collateral value or you could use equity and other type of assets, but now the SBA requires you to have a 10% cash injection into the project, and then you have to kind of spread all that. So that's one of the matrices we do. Then we do a matrix on the collateral side and break down how much the loan to value is allowed by the SBA to make sure those things work, because they need to know going into it that if there's not sufficient collateral, the SBA could be able to come back and say, well, you need to provide equity in your home, because if you have more than a 25% equity position, they're going to require a second on your home or third or whatever it may be. The other side. So again, being prepared with some type of financials. And I think, I'm not sure if Ryan or Tim had said this, working with your local SBDC or Economic Development Group. We have a great partnership with ours. We send them to them to be able to help them. They put it in a format that banks could utilize and make sure that they're legitimate numbers. They've been worked through. A lot of the kinks have been worked out, and that they're actually cash flowing before they come to your office. So I think going through that, and that's what sometimes takes a little bit longer in the process, is you're not going to walk in the door and get a loan just like you can a car loan, but you're talking about being able to be in a position to operate a business and be successful. Going through that process does take some time, because you're talking about, how am I going to organize the business? Am I going to be an LLC? Am I going to be subchapter S? Am I going to be a sole prop? And then working all the way through. So I think customers have entrepreneurs. I love them. You know, they're hard workers. They have the energy, and we want to be able to help them. So a lot of times, making sure that they do their homework ahead of time and work with key partners to get them to be able to provide a good application to a bank, and then getting it with a good SBA lender that has experience, has packaging available, and then can help them process that much quicker.
Thank you very much, Russ. Panelists, Tim?
No, I mean, Russ hit it on the head. I think the only thing, and you did bring up some stuff, some mistakes I didn't think about, and it's good for everyone on the call to understand that we as SBA lenders are really harped on by the SBA on certain aspects of an SBA loan, and that's equity injection, documenting use of proceeds, even a credit elsewhere. Those are all major hot button issues, simply because there are unfortunately unethical people out there that have taken advantage of the SBA system and have done things the wrong way. So a lot of times borrowers will get frustrated with us when we try to document an equity injection, and it may be $100,000 that they just put into a checking account last week. And then the SBA says, no, we need to make sure that that came truly as equity and it wasn't a loan. And if it was a loan, we've got there's all sorts of rules. I won't get granular on you, but I think that, again, it goes back to having a lender that can help educate the borrower to say, hey, I know this is a pain, but this is why we require this information. This is why we have to go back and document all of this information.
Yep, good comments. Michelle?
Yeah, I would say that, Tim, you just touched on it with the credit elsewhere test. A lot of people don't understand, we have to show an improvement for an existing client to refinance debt. So we have to show that we're putting the company in a better position. So right now, with all the programs that are out there, there's a lot of companies now that say, I want to invest. That's my latest one was a client that wanted to invest in getting an SBA loan, simply because he heard about the payments. He wants to take advantage of the program. Well, we have to be able to demonstrate that you actually need an SBA loan, that you're not just coming here and just wanting to take advantage of the program. The SBA is there to help businesses that cannot get credit in other situations. So we have to show that we're improving cash flow. We have to show that we're making we're putting the company on a better position, if you will. The other thing I want to clarify is that on the flip side of that, I think a lot of clients come and they think, well, it's the SBA and it's a federal program, so I qualify, right? No, we still have to do prudent lending. So, make sure your credit score is clean. Make sure that you can demonstrate the ability to repay debt. So, come into this knowing that you're going to have to put some equity in. SBA still wants to partner with you. The bank wants to partner with you, but they want you to have something invested as well. So I would say those are some of the things that haven't been touched on that I think a lot of people don't understand about the SBA program.
Good comments. Ryan, I hate to leave you for last because there's already been some really good commentary there. I don't know what you'd like to add to that.
Yeah, I'll just kind of add on to what Russ had mentioned in determining exactly what the need is. If you come into a bank and say, hey, I need a $100,000 loan for working capital, and then the banker says, okay, what are you going to use that working capital for? And you have a blank stare. We're going to want to have an idea on what exactly those funds are going to be used for. So you could say, oh, well, 40,000 of it is for marketing, and then 25,000 is a new computer system, and then fill in the blank. But having a broken down idea for what exactly you're looking for is hugely beneficial. Also, in the instance of equipment purchase, again, not to get too in depth here, but understanding exactly what the equipment need is and then how it's going to be handled on a tax basis, because that, Vince, you had discussed earlier, generally it's a 10-year maturity. Well, if you have something that has a useful life that exceeds that, and you plan to depreciate it over that useful life greater than 10 years, you could be eligible for a longer term without the involvement of real estate. And so having an exact understanding for what you need in that equipment and then what the return on that is going to be will help eliminate a lot of the questions that the bank is going to ask. And ultimately, if you have an understanding for that, it could add, up to another 60 months to your loan, better helping cash flow on top of what the SBA already offers.
Excellent.
Vince, I'm
Yeah.
sorry.
No, go ahead.
Vince, I was going to tell you one other thing that I try and let people know too, is make sure that you have if you have college student loans, whether they're for you or they're for parent loans, make sure they are in good standing before you apply for your SBA loan, because that is one of the disqualifiers on any government-based loan that you've had. If it has had issues with slow pays in the past, and they'll look at them if there's been slow pays or issues in the past, as long as they're current, but they want some good explanation on what caused that. And there are situations that happen that are under, that people don't have control of. And I think that gets taken in consideration, but that's something to consider too. If you have that going into it, make sure you have a good letter or something that you can describe to your banker, and that'll go on to the SBA on what the issue was and how you kind of took care of it.
Great. Panelists, excellent discussion. I think there was so many good points that were brought up during that question. I think our participants probably are really, really appreciating that honesty there. Ryan, so you're saying that the bank is just not going to give you $100,000 and you can do whatever you want with it? I'm a little surprised.
If you find that bank, then let me know, because I would like some as well.
Great questions. I really think that, we were going to go into the next question is like, how do you know if you're working with a good SBA lender? I mean, in a bank, I think a lot of those have already been answered already during the conversations that we've been hearing. But I would like to add in, I think there is a term in there that maybe some of our participants are not familiar with when they hear a preferred lender. Can someone jump in and tell our audience what a preferred lender and what that actually means to the client?
Here, I can. Preferred lender is a status that you get with the SBA that basically gives you what's called delegated authority to approve a loan without the SBA having to underwrite it. So there's different levels of delegation. There's SBA Express, and then PLP is one of the highest delegated authorities. And for the majority of the loans that you can come across, the SBA designates the authority to banks who have done a high volume of loans that understand the SBA underwriting criteria. And so then typically in a loan process, after the bank approves a loan, they have to submit it to the SBA, and the SBA conducts their own underwriting. Well, that can add 30 to 45 days to the closing time frame. So if you're dealing with a bank with a preferred lender status, you cut that 30 to 45 days window out and just allow them to get closed quicker. And then also they have the peace of mind of knowing that when the bank approves the loan, the SBA is approving the loan.
Okay. Tim, thank you for that explanation. I just think some of our participants out there may not be familiar with that terminology. So I just wanted to make sure that we had that out there explained. Is there anything that hasn't been covered when you're, looking for, I think what we've heard here is making sure that you have the right lender. When we go back to misconceptions about SBA, one of the things that I've always heard is it takes forever. I've been with this bank and it's taken me 8 months to get my SBA loan done. And they're so frustrated by the time they walk through the door. And I think that if anybody who leaves this webinar today learning anything, I think it's been pretty pretty apparent that working with the right bank and the right lender specifically when it comes to SBA lending is probably the most important thing you can do. I think Russ said that or somebody said they'll just pick who they're currently banking with, but I would challenge our participants to go out there and ask those hard questions. If you're looking at an SBA loan, how many SBA loans have they, as a lender, have they actually funded? That would be a question that I would ask them directly. And tell me about the process on how you approve your loans. How many has your bank done this calendar year? So with our participants out there, I would ask those hard questions because I think, as you can see, having the right lender and having the right bank can make a big difference.
The only thing I would add to that, Vince, is you can always contact your regional SBA office and get loan production numbers from them. And then you can also see which banks in your area have preferred lender status. And
Yep.
that is a good that's a good information to get from your regional folks.
Yep. You're absolutely right, Tim. Would anyone like to piggyback on those comments?
This is Russ. I would say your local economic offices like the SBDC, they work a lot with the banks, with SBA, they know what's going to go SBA. With talking to the bankers, I think it's a great resource to go and talk to them and say, hey, who's doing all the SBA loans? Who do you recommend or in our area?
Okay. Thanks, Russ. Gonna change gears a little bit. Is there any specific industries that are currently that you can think of that are good fits for SBA lending?
I'm going to comment here and say that I think the beauty of SBA is that we're not very industry specific. And I think that we are outside of investment real estate. I think that if you talk to most of the lenders here, we have done everything from dentists to trampoline parks to gyms to veterinarians. I mean, there's just a wide variety of industries that fit SBA. I do believe that we are more prevalent in service-based industries that don't have collateral. A lot of our loans end up being SBA loans because there just isn't adequate collateral. If it's an industry where talent or software or people are your assets, then you're going to be prime for SBA lending, even if you've been in business for 20 years. So I think the beauty of SBA lending is that we're open to everything with the exception of investment real estate. And a few industries that maybe are not compliant with many lending practices. So I'll leave it there.
Who wants to add into that conversation?
No, I think Michelle's exactly right. I think we're relatively agnostic when it comes to industries, but the SBA's primary purpose is to mitigate collateral shortfalls. We talked about it a little bit earlier. If you don't have cash flow, we can't do the loan. They have a requirement of 1.15 debt coverage, and we won't get into all what that means, but you have to be able to prove you can pay us back. It's a lot of people will come in thinking they can use SBA as a crutch to mitigate lack of cash flow, and we can't do that. So
good point, Tim. Brian?
I think
Would you
they
like
hit it
to-
all.
Okay.
Yeah, I think everything was kind of spoken for there. So
Yeah, they did a good job. Russ, anything to add to that?
I would just say that there are some industries that are a little bit more difficult to work through, but that's where your experienced lender comes in, I think, as far as SBA. Especially if you're talking about the bar industry, nightclub industry, those are all difficult areas. Restaurants is another area. They can be done, and that's why it's important to get with the right banker that has experience in packaging those SBA loans.
Okay. Thanks, everyone. And fantastic answers there. Appreciate it. So what are some best practices for business owners out there? And we'll just combine the tips and advice too. If they're out there thinking about getting an SBA loan this year, and we've already heard some tips and advice, but what are some best practices out there for those owners when they're considering an SBA loan?
I'm a big believer, have a plan. So, if you think you're going to need SBA financing, put a plan together. And a plan means that you're going to, while your banker is going to give you advice as far as what you might qualify for, you need to walk in with an idea of what your need is. Make sure your bookkeeper, your CPA, your attorney, make sure they all understand what you're looking for as well, so they can have the proper entity set up for you, so your financials are current, so you know your numbers. And that's probably my third point is know your numbers, know your numbers, know your numbers, and know them a little bit more. Especially in this environment, coming off of a year like 2020, where we're dealing with a lot of clients that had revenues that declined. You need to understand what happened last year. You need to be able to explain to your banker why that is. So going back to earlier when we said, we still have to have cash flow, to Tim's point, we still have prudent lending. We still have to be able to demonstrate the ability to repay loans. A big part of that is a good SBA lender is not going to look at your financials and say, well, revenues are down, so it's a no. A good SBA lender is going to look at your financials and say, hey, I see that you were controlling expenses. I see that this happened. I see that that happened. Tell me more. And so that's key to me is have a plan when you walk in, when you call your banker, and make sure that your financials are current and know what those financials mean, and have your advisors all on board, because your banker is going to need to work with that CPA, with that attorney, to make sure that everything's good to go.
Yeah. Good advice,
Vin-
Michelle. Russ?
Vince, this is Russ. Yeah, one of the things that I'd like to do, and I've said this a number of times, so work with your local SBDC office. One, if you have an idea of what you want to do, they're there to assist you at no cost. I mean, they do not charge a customer for helping them. So, I mean, it's one of the greatest secrets out there that they get federal funding to help entrepreneurs. But the thing I like about it is they're going to help you prepare a business plan, which you have to understand what your business model is going to be, because you're going to have to answer those questions and get other people to buy into it. But they'll help you with that. They'll help you with the projections. They offer classes like Start Your Own Business class, which includes how do you structure your business, how to compute projections, how do you do market research to know what your industry is going to be, and then kind of help you put all that together. And they'll walk you through the whole process. And so when you're ready to go to a bank, you're so much better prepared to answer those questions when you sit down and go over a collateral matrix, or you go over a sources and uses matrix, that you understand going into there, what you do, what you're doing, and how well you're prepared. So to me, I really encourage my customers, when potential customers, the first thing they come in, I say, have you talked to the SBDC, or what have you done on your plan? And I will set up an appointment with the SBDC person on the line and make that contact and help them through the process. So basically you have a banker and an SBDC professional helping you from the beginning to end. To me, that makes a big difference for clients. They want the help. They have the drive. They have the entrepreneurial sense. It's us as bankers and professionals in SBDC to help them get where they want. So to me, that's the best advice I can give.
Okay. Ryan?
Yeah, really, my biggest aspect, Michelle hit it right on the head. Understand your financials and have as up-to-date financials as you possibly can. That's important for any type of loan, but it's especially important for SBA lending, and it's especially important coming off of the economic environment that was 2020, because businesses have been impacted a lot. Some more so than we maybe even anticipated, looking at loan production numbers from the PPP round 2. But anyways, having a good understanding for that, and then also knowing the economic environment is going to be extremely beneficial. when considering the loan request.
Thanks, Ryan. And Tim.
I'm going to echo what Michelle said. Business plans aren't just for startups. We need to have a roadmap of where you've been, where you are, and where you want to go. And financial record keeping, management, interpretation of your financials is a huge part of that for a banker. You've got to be able to walk your banker through what your opportunities are, what your challenges are. And I think just being prepared is something you can't echo enough, and meeting with your banker earlier rather than later. You hate to go in to meet with your banker and tell them you need $500,000 in 2 weeks or your business is going to get shut down. You'd rather say, I've got this bottleneck coming up and I need some help with it. And so I think that goes a long way for the bankers.
Yeah, I think one of the main things that I've seen over the years is they always come in too late. To Tim's point, they need the money yesterday. And when you're out there having those pre-active conversations with your banker before you have a big need really goes a long ways, in my opinion. So great commentary. I think we do have a question from our Facebook stream event. So Mindy, would you like to go ahead and cut in on that?
And I'm not sure if this question has already been addressed or not, but someone wants to know, what's the overall SBA lending appetite at the moment? Because I keep hearing them say, let's help small business, but to be honest, the roadblocks seem a little large to me.
I
Yeah,
would say
so
the appetite is strong. I'm sorry. Go ahead, Ryan.
No, it's okay. I'll kind of take that because I touched on this point earlier. It is a loan from a bank. It is not a loan from the federal government, and so the bank appetite is what matters first. And so you need to make sure that you have a bank that is suitable for that industry. So I know Russ had mentioned it, but bars, nightclubs, and restaurants are a hot button for banking industry wide right now. They're difficult they're a little bit more difficult to provide that credit because we've seen that they can just be shut down at any given time under federal mandate. That's not good for cash flow, and your loan repayment is dependent upon cash flow. Not saying that that's a total debarment, but you just need to consider that when talking to your banker, that is going to be a hurdle for you. And so it really boils down to what the bank's appetite is. And then to Michelle's point, from a program wide, it is a great time to get an SBA loan with the benefits that they've had in place. And coming off of the economic environment, having those superior repayment terms is going to be amazing for businesses. So it's the fine coupling of finding a bank that fits within your appetite and then being well prepared in doing so.
And I would say, to follow up where I was starting at, and that is, the 90% guarantee that Tim touched on earlier, along with having 3 months of payments made, that definitely does take not all the risk, but takes the risk level down a little bit for sure. So now is a great time to get an SBA loan.
Yeah, I would agree with that. The SBA is doing their part, and the government's doing their part to try and reduce obstacles to allow the banks to get SBA lending out there easier. We talked about the guarantee fee waiver that we kind of glossed over a little bit, but that can sometimes be the biggest obstacle that we encounter with our clients, especially on larger loans. The government or the SBA charges a large fee to get these loans out there, and they've waived that fee, and that's that could be $30,000, $40,000, $50,000 sometimes, depending on the loan. So they are doing what they can to try and get the banks to encourage more lending out there.
It appears to me that maybe they're not talking to the correct bank. And I may be oversimplifying that. How I'll follow up on that. Maybe the bank is so consumed with PPP that they're not actively looking for new originations on loans. Is that a possibility?
There are banks that will go all in on PPP, and they may not do any 7A lending while they're working on PPP. But I think most of the banks, at least in this area, I think are doing a good job of doing both.
Okay.
Yep, and Tim had mentioned it earlier, but reaching out to your district, your SBA district office, and finding a bank that is very active in both 7A and PPP lending is really what you're looking for coming in today's environment.
And I will go ahead and jump in, and we're hosting the event, but your local SBDC and your Capital Access Center does have a very good pulse on what lenders are active in their markets. So you can always reach out to us to see that. It may save you a lot of time. We're getting a lot of questions coming on the chat. I think, has there been any veteran programs come out recently? I know there is one, but is there any advantages for veterans right now in SBA lending?
Well, the Veteran Advantage program was one that was out there for a long time, and the biggest advantage was they reduced the guarantee fees. So I would say prior to all of the COVID stimulus, yes, there was now with the guarantee fee being eliminated. I don't see, and maybe somebody on the call and the panel knows more than I do, I don't see any other veteran programs out there that may give them an advantage that's not already wrapped into the stimulus packages.
I concur with you, Tim. It's unfortunate, but the veterans programs through the years have gone away. And that's something that I think that we all need to, and I think most lenders are active in asking the SBA to hopefully bring that back someday.
Okay. Any other comments from the panel? No?
Hit
Okay.
it on the head.
Yep, I would agree with that. Another question coming in: can I do an SBA loan without my spouse's signature?
It depends, but the short answer is yes. The scenario where they possibly wouldn't have to is if the spouse does not hold any ownership and a mortgage is not going to be required to be taken on the home. If a mortgage is required, they will have to sign a guarantee, but it will be at a limited status. So it's just limited to that equity in the home or whatever real estate is taken.
I think we're also, thank you, Ryan, I appreciate that. We're also getting questions in regards to, do I have to utilize my home for collateral?
This is Russ. The SBA states in their SOP, their standard operating procedures, that if you have equity of 25% or more in your home and there is a collateral deficiency, they will take a second mortgage on the property.
And I want to clarify, that would be on loans of 350 and over.
And loans not fully secured.
Yes.
So sometimes you'll have loans that are deemed fully secured by the SBA. So
Right.
they will give us, they have a schedule of the SOP that has their advance rates. And I think Russ talked about a little bit, but advance rates on receivables, inventory are very, 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 very low. But if you have equipment, real estate that makes it deemed fully secured, they don't require it.
Does that mean if it's still unsecured and it's under 350, can the bank still ask for it?
Oh, sure.
Bank can ask for it, absolutely. But it's not a requirement of SOP.
It's a good point, Vince.
Just want to make sure we're covering. Sure. I think it's a great discussion out there. I'm looking at, there's another question coming in. What counts as fully secured? And it says 100% collateral.
To go back to Tim's point, again, the advance rate for AR, I think, is 10%, inventory is 10%. So I will caution people, and I don't know what equipment is. Tim, correct me, is it 50, I think, maybe?
I
50 for used.
Yeah.
It's either
used,
75
okay. Yeah.
or 50, depends on the equipment.
So just know that the bank's going to use, typically use the SBA advance rates. And so while you may think from looking at your balance sheet, you're fully secure, once the advance rates are applied, there's a good chance that you're not going to be fully secure.
Right.
Would anyone like to answer the question of why advance rates aren't completely equal to maybe market value sometimes?
Yeah. If you will, I'll use inventory, for example. If I have a customer that is a bakery, so to say, and they've got $15,000 worth of baked goods, there is no way that I'm going to be able to collect on all those because I don't sell baked goods. Number one, but number two, spoilage. So you're going to lose some of it just in the time frame that it will take to try to attempt to sell that inventory. But then third, this, quite often or quite simply, the bank wants to try and make themselves whole as easily and as quickly as possible. And so it might be sold below market rate in order to get something.
Thank you. I think most banks look at it too. They want to see any kind of collateral that's easily that can be liquid. So think about heavy equipment, things of that nature, things that can go to auction where it's easy for a bank to liquidate. I think is usually kind of something along that lines.
So
Have
there is
another.
there is one more question that came in through Facebook.
Okay.
It says, I'm in lending, so I'm asking, how flexible is the SBA to backing us up at the moment?
I'm not sure what they mean by that question. Can you see if you can ask a little bit more detail?
Yeah, I'll see if I can get.
Okay.
I'm guessing they are. From my understanding, it sounds like they work in a bank and they're asking how flexible the SBA is to working with them.
Is
Okay.
somebody who's not maybe an SBA lender in the past or hasn't worked with SBA? Is that what they're asking?
It appears that may be the case.
Yeah, so if
Oh,
that's
okay.
the case, really, there's two scenarios. I don't know what the better answer is, but there's two scenarios that could occur. If you're within that lending institution and your institution feels that it makes sense to become a certified SBA lender, then do so. I don't know the runway on any of that, but if there's a bit of a more immediate need, what you could also do is utilize a lender service provider that'll allow you to have the knowledge in place that the SBA is going to ask for. So the bank is still the funding vehicle, but having a lender service provider on your team will help to mitigate any unknowns within SBA lending just due to inexperience.
And I would say this, and Tim, join in and correct me if I'm wrong, but we've both been through the process of becoming a PLP lender, and there's a lengthy runway. So if you think that if you're a bank that has not done SBA lending to this point, and you think you're going to be able to obtain your PLP status anytime soon, it's not going to happen. So there is a process where you have to demonstrate that you have so many SBA loans on the books. Somebody has to review those SBA loans on the books. You have to have so many resources dedicated to SBA lending through years of experience, through packagers, through closers, through underwriters, and so forth. And there's a whole process there. So kind of joining to Ryan's point, if you are getting requests for SBA right now and your bank's not set up to do so, at that point, it would make sense to partner with a bank that does or work with an LSP, a loan service provider.
Yep.
And Tim, join in wherever I made a mistake.
No, you're exactly right. And they've made it even a little bit harder to become a PLP recently. So they've changed it to where now you have to process 10 loans before they'll even take your application. So it's not an easy delegated authority to get.
And I think that's great advice about working with an LSP before. It helps get your feet wet, if you will, into the SBA lending process. There's also your local SBA offices where your local SBA representatives will come out to your bank and work with you to get you to that point, get you familiar with the SBA process, go through I forgot what the electronic version is where you go through and put it in. It escapes me, but if you want to put loans on into the portal, they'll help you with that as well. So there is a lot of resources out there for lenders if you want to get involved with SBA lending.
And I would say this though, again, from a borrower perspective, you would not necessarily be working with an LSP, your bank would. So, you seek a bank that specializes in SBA lending. That's what I would do if I was in your situation.
We're getting quite a few questions. Does the SBA value intellectual property and patents?
I don't know that they give any advance rates to it. I think banks like IP. I mean, banks will take your intellectual property as collateral, but I don't know that the SBA necessarily gives it considerable value. But
Yep, you're correct. So from a collateral standpoint, there's really no consideration given. But obviously, given that you have developed that IP or possibly even obtained a patent, that speaks to your cash flow. There's revenue generation possibilities that are there that may help in getting the loan approved. But there's under SBA, there's no consideration given from a collateral standpoint.
Yeah, I would agree. The only time I've come across IP and patents is business acquisitions and business transitions. It'll help the value of the business, and it'll go into consideration on the multiple they take into consideration for the value, but the SBA doesn't allocate any collateral to it, or does not credit you at all with the collateral on that.
Another question that we have come in: can I secure an SBA loan without a personal guarantee if I have sufficient collateral?
Nope.
no.
Nope. They always require an unlimited guarantee of anybody that owns over 20%.
Yep.
Let's see. I think we covered most of the questions. Mindy, if I happen to miss one in there, feel free to pipe in here. We're going to probably be wrapping it up here in just a few minutes. We do have a couple questions left here. We'll do, in general, panelists, what are some of the typical loan closing timeframes that you're seeing? I know that it's always different with each borrower. Usually, I always kind of made the comment that it depends on how prepared the borrower is how quickly we can close. And there is a caveat when it comes to real estate loans, as Russ had mentioned earlier. But in general, what kind of timeframes are you seeing for from approvals to closings?
I would say 6 to 8 weeks is very standard for SBA lending. A lot of it's going to depend on the volume at the individual bank, truth be told. There's a lot of time and process spent in underwriting and document collection, and those seem to be the things that take the longest. But I think through the years, it seems like it's pretty standard. 6 to 8 weeks seems pretty common.
Okay. Panelists?
Yep, Michelle's spot on. There's going to be a lot of different considerations, such as where is the business at from a financial performance standpoint? Are they an existing customer? What's the ask? Is there real estate involved? There's a lot of boxes that you need to check, but if it's a pretty straightforward loan, Michelle's exactly right. 6 to 8 weeks is your general time frame, and it can be shorter if it's an existing customer where you have information, you have insurance in place, you have all of those things that are required on the backside that can help to shorten that time frame.
This is Russ. And I think some of that depends on if you're working with a PLP lender that can make the decision right then and there. And, on an express line of credit, that could be 2 to 3 weeks. If you have enough information, if they're an existing client, you already have info, or if it's a new one, and it depends. But, if you have the ability to underwrite them as a PLP lender, that makes a huge difference. So, usually on those, they're less complicated because it's, unsecured. You don't have all the collateral needs that you have to do a lot of the information on. And then if it's more complex, it could take multiple like 8 weeks, like they're saying. The other thing I'd throw out, and we haven't talked about this at all, is, you know, depending on the size of the loan, you're going to be looked at or asked about providing some type of life insurance policy. And to get some sizable life insurance policies anymore, some of those can take a long time because they have to go to their underwriting, they have to have medical exams, or at least workups that they have to do. So to get a sizable life insurance policy, and, you know, I'm saying sizable could be, you know, a couple $100,000 or more, depending on a number of, you know, your policy underwriters, that could take a month to a month and a half. So, you know, that's something that, you know, we try and discuss up in the front of the process, is if we think there's going to be life insurance needed or sufficient life insurance, to start working on that, because that could be a big delay for your underwriting too.
And I want to touch on that. I think that when you're getting an SBA loan, unless you just have a really great agent that can move quickly and can assure you can get that assignment taken care of, this is probably the time where it makes sense to work with some vendors that do specialize in providing life insurance for SBA loans. They move quickly. They know how the assignments work. Nobody says you have to keep that policy forever. Nobody says you can't go out later and replace that with a more, I guess, less expensive policy, so to speak. But I think there's value in working with some of these vendors that specialize in providing policies for SBA loans. And to Russ's point, you know, again, that's another caveat where the SBA does require that if there is a collateral shortfall on loans over 350, we have to collect those insurance policies. So it's very common. Don't be surprised if that's not a requirement of your loan.
And would you like to add anything to that conversation?
No, I think they did it perfectly. I'd just muddy it up.
Okay. I think one of the things that came out of that is, so there is a difference between closing an SBA loan and an approval. So say a client has a complete package with all the financial requirements completed and submitted to you. What is a typical timeline for an approval at the bank?
Man, that can vary bank to bank. I would say 30 days maybe a safe window for a bank to get it approved. You know, again, we kind of goes back to, it depends on how quickly information comes in from the borrower that's missing.
Right.
And then, you know, that's separate from the SBA approval. The SBA's got to issue an authorization for you to close it. And that depending on your delegated authority, could take another 30 to 45 days, or you could close quickly thereafter the bank's approved if they have a PLP status.
Okay.
A lot of times it's going to vary on loan size too. You'll get a $150,000 loan approved generally much quicker than a, you know, $3 million loan. So, you know, when you're dealing with, we just have when you only have maybe one letter that has to sign off on it versus going to loan committee or multiple loan committees.
Good comments.
This is Russ. And again, it's going to vary on banks. I mean, we're a community bank. We underwrite our own loans here. You know, we have our own credit analyst on site. Usually we try and get some kind of approval or tentative approval to a client back within 2 weeks. And sometimes it might be longer if we're waiting on information. And if it's more complex, it might take a little bit, but some kind of approval subject to conditions. And then, because we'll know if it's going to fit the SBA loan anyway. So, you know, getting the approval is one thing. Closing could depend on what you have as collateral, whether there's environmental that's needed, where you're waiting on life insurance policy to get underwritten, or appraisers. Right now, appraisers are running 35 to 45 days behind. So, you know, that makes a big difference. And then if you have to have it reviewed, or and then some of those take a little bit longer. So, you know, getting the approval is just that first part. Usually we're within 2 weeks or a little bit over, and then, but closing is different. So to me, they're two different.
Okay. Ryan, would you like to add anything to that?
Not really. I think Michelle hit it square on the head. Loan size is a big determining factor. You know, it's a lot easier to get a $100,000 loan than a $5 million loan.
Yep. I would agree. Well, it looks like it's 11:22. We're scheduled to end at 11:30 today. We're a little bit running out on questions here. I think we've answered all the questions that have been in the chat. Unless I'm mistaken, Mindy, do we have everything covered?
It looks like we do.
Okay. I'd like to, we'll go ahead and wrap up this session. I really want to thank our panelists today for allowing the time out. I know you guys are all very, very busy with different areas of the bank, PPP, and with just doing business every day, especially in this challenging time. So it doesn't go unnoticed by me and our participants for you to volunteer your time and your expertise to everybody that's been in attendance today. So thank you very much to you and your time. And I really appreciate everybody being on our presentation today. Again, if you have any follow-up questions, you'll be able to get contact information of the panelists too after this recording. And if you have follow-up questions, you can contact your KSBDC and your Capital Access Center, and we'd be happy to answer those questions for you. Thanks, everyone, and have a great day.